people say you can't, buy a big property by yourself. And that's true. Yes and no, depending on who you are, who that person is. But for us, we scaled a business with other people and using other people's money so they get the return that they're looking for and the tax benefits and things of that sort. And we grow a business as well. So you can have it all. It depends on what you're looking to create. And you don't need to have thousands of units. You could have 3 and be doing great, right? Or 1. So, and that's the other myth is it's number of doors is success in real estate investing. And so it sells podcasts, it sells courses, but it doesn't necessarily mean that you own 100% of a large multifamily. You could be owning 5% of that 200 unit. We don't own 100% of our 2,000 units, but that's the model we've chosen for the growth that we've, kind of focused on.
Welcome to the Business Ownership Podcast, brought to you by Awareness Strategies, helping you navigate the waters between entrepreneurship and ownership. Hey there, peeps. This is Michelle Nedelec, and I'm super glad that you're here with us today because I'm here with my most amazing guest, Liz. Liz, thank you so much for being here with us today.
Great to be here, Michelle. Nice to meet you as well.
Awesome. So give us a highlight of who you are and what you do for business.
Sure. So I've been an entrepreneur, real estate investor for about 17 years or so, 20 years almost. Mostly focused, started multiple businesses, but we have one business that focuses on buying dilapidated, large scale kind of apartment buildings on the East Coast. So we renovate them, reposition them, and then rent them out to folks who are in need of housing. We do that with investors and we syndicate those projects. I also have another business, passion/business, which should be part of the same. But about 5 years ago, my friend and partner launched the Real Estate InvestHER community. So it's a platform, it's a community where we have mentorship programs, we have conferences, free events, online, offline, all around empowering women to live financially free and balanced lives. And one way to do that is obviously through real estate, but there's probably multiple ways to become financially free. And that's what we focus on, both business, real estate, and self-care. So we created a community to support women along the journey of investing. And that's the current business that I probably spend the most time in.
Nice, I love it. So how did you get into investing as your thing?
At the time I was going to get my degree in master's degree in social work. Wanted to be a counselor, wanted to open my own practice. And at the same time, as I'm finishing up my graduate degree, my brother-in-law handed me Rich Dad, Poor Dad and said, you have to read this book. And I said, I don't even know what you're talking about. I'm like reading, textbooks. And long story short, that really opened my eyes up to entrepreneurship, real estate investing, and just the world of, not working in a business and as an employee, but really owning a business, right? And then making investments as an investor. And those concepts I didn't grow up with, come from a hardworking family, lovely family, but more of a, working hard and having jobs and those sort of things, not so much businesses and investments. So the one thing it tells you in that book is to get a sales position. If you're not too, you want to be an entrepreneur, you have to become good at sales. I said, okay. So I ended up not getting a job in my degree, with my master's. I actually ended up getting a sales position in a consulting company. And at the same time, we bought our first property in 2004. It was a duplex, got a loan from my father for $30,000, which was a big deal. And then we kind of got our foot in the door of investing in multifamily.
Nice. I love it. So now when you're working with women, well, let's start off with kind of in the general area of investing in real estate. What are kind of some of the misnomers and things that are still out there as kind of the myths of, why not get into investing in real estate? And then let's talk about women in particular and how it affects them more.
Yeah, absolutely. So, HGTV, I don't know if it's done a good service or a bad service to people, but, in 30 minutes, right, you can flip a house and renovate a property and make $100,000, right? So, right. It's not as simple, and I think that the level of investing always comes down to, there's an active part and then there's like a residual part, right? And so flipping and wholesaling and a lot of things that are in the realm of investing, if quote unquote, are actually not quite investing. They're active kind of role that you have in an active kind of business so that, a business can be created, certainly, and also capital can be created. And with the intent, in terms of really, number one reason women invest in real estate is for wealth building, to build wealth. It's not just to buy the Lamborghini or the, kind of thing. It's to build wealth and for the legacy, especially for their family. So what we thought, what the other part of the business is obviously on the passive side or the residual side. So that's buying a rental property. That could be a long-term property. That could be a short-term property, right? Short-term rental. So, in terms of myths, I think one would be that you need money to invest. You need money to invest. It doesn't necessarily need to be your own money. And I think as you scale your business and you want to buy more property, you have to be very conservative. Obviously, you have to be smart with investing decisions. And so for us, we've been able to scale with other people. We have 400 investors that we work with that are more passive investors in our projects. And so for us, people say you can't, buy a big property by yourself. And that's true. Yes and no, depending on who you are, who that person is. But for us, we scaled a business with other people and using other people's money so they get the return that they're looking for and the tax benefits and things of that sort. And we grow a business as well. So you can have it all. It depends on what you're looking to create. And you don't need to have thousands of units. You could have 3 and be doing great, right? Or 1. So, and that's the other myth is it's number of doors is success in real estate investing. And so it sells podcasts, it sells courses, but it doesn't necessarily mean that you own 100% of a large multifamily. You could be owning 5% of that 200 unit. We don't own 100% of our 2,000 units, but that's the model we've chosen for the growth that we've, kind of focused on. Doesn't mean it's for everyone, especially women. It's not about quantity, it's about quality and also having the lifestyle that they yearn. People don't start buying properties so they can work 24 hours a day, 7 days a week and kill themselves. It's usually not the reason they get into this.
All right. Well, and I do see a lot of guys that are what I'm going to call success oriented will typically, in my experience, go into commercial real estate because it's more kind of high profile. It's sexier, it's whatever. And then they go into the number of doors and getting other people's money or OPM to be able to make that kind of more robust, which I totally get. But I'm going to talk about the other end of the spectrum for a second because they know how to do what they do. The other end of the spectrum, I think, is laden with a lot of myths and mysteries and inappropriate information that stops them from investing and stops them from becoming financially independent because they're so worried about all of this stuff going on. So the first one when it comes to other people's money is, what if I fail? What happens to that money? Am I responsible to pay them back? And what if I can't?
Yeah. And that's very relevant. I mean, and that's very true. So when we got our start, we used I'm just going to give you a quick example and then answer that question or answer that concern. And it's a valid one. So when we got our start, we really scaled about 30 doors on our own, dime, if you will. Right. Yep. And then we stopped and we got plateaued and all the different resources that we had. And so we started to work, with my parents, my husband's parents, you kind of go to the inner circle. So the key is can you be over leveraged when you're using anyone's money, let alone your own money yes. So that's a concern. And so, but there's 2 ways that people are going to work with you, whether they're owning the property with you as active partners. We're going to go 50-50 and go buy this rental property, or you have people who are actually going to lend the money. So they're structured differently. So the actual impact to what you're saying, Michelle, is actually different, for those 2 scenarios. So let's go down the equity side, right? Me and my cousin Molly want to buy a property together, and Molly's going to keep the books and she's going to oversee the contractor and I'm going to do other things. So we have like a 50-50 partnership, right? Doesn't mean it has to be that way, but just for the argument's sake. Yep. Now the property renovations cost more than both of us have anticipated. What ends up happening is you're owners together. You win together, you lose together, right? So the way you structure, and this is where you have to have the right paperwork in place. You have to have an operating agreement. So we can go back to that and say, what am I doing? What are you doing? And God forbid something happens. We all have the best ideas possible. And we see things, we're like, let's go do this. And then it can end really badly, especially if you're not prepared, or if something happens that you just didn't expect.
Mm.
So you have to lay all that out ahead of time. We're big believers of getting those conversations written out before you partner and before you do anything, especially with family, because that happens in family. You'll see people talking about a deal that goes south, a best friend or an uncle or a sister. And it's just, you don't want to get to that point. So that's on the ownership side. On the lending side, I go buy a property and I need $100,000 to make sure I can do the renovations. So people can privately lend, just like you'd go to a bank. You can go to your Uncle Tom, and you have to have certain paperwork established ahead of time. Promissory note, God forbid, I can't pay him back. Does he get the property? All those things have to get laid out in paperwork ahead of time, depending on what state you're in, so that everyone's protected. So I'm not a big fan of somebody using other people's money if they're not protecting that other person and then the business itself. Having said all that, there have been times that our projects have gone over, right? There are unexpected things. Contractors steal money. I mean, I can go on and on the horror stories, but you have to have the long game, the long term in mind. And for us, there was a time that we had about a $50,000 note that through the refinance, we weren't able to pay back our lender. So we created a note, we created a structure where there was a payback schedule. And so we had, a certain time frame, an agreed upon time frame. And ended up, I think it was like a 2-year time frame. We ended up paying them back within 6 months. So again, things happen, but if it's not in writing and everyone's not clear on what happens when it hits the fan, things can get really bad and relationships can end. So that's key, being upfront and making sure the paperwork and the expectations are really clear up front when you're working with other people's money.
Yeah. Well, and I think when you mention it's a long-term game, I think that the real estate game, if you want to put it that way, has a lot of longevity to it, and it has a lot of history. And I think the more you can tap into people like you that have the experience, once burned, twice smart kind of thing, is that you get to see things from a different point of view, right? Somebody going into a deal knowing nothing about what could potentially go wrong versus somebody like you that goes, there's 100,000 things that could go wrong.
Yeah.
Like, how do you prepare for these things? And, are some of them, odds are probable it's not going to happen, but some of them, the odds are probable it's probably going to happen. And you need to be aware of these things. So how much of that experience kind of, one, are you bringing to the table? And two, how much do they get to, that your people that are investing with you or educated from you get to learn from that?
Yeah, I always say there's like a collective genius. And when we started the InvestHER community, most of what we offer to women is free, to be honest with you. We have a mentorship program for women who are scaling their portfolios that we've curated over the last couple of years. But I'd say our Facebook community, our podcast, our conference, our meetups we have 50 meetups across the country. These are for women to really tap. We like to call it the collective genius. Women have such an ability to be such phenomenal investors. Women outperform men as investors, yet women's confidence is much lower statistically, yet they outperform men when they actually do it. So we exist to fill that gap. So it's not just about a knowledge piece or a tip. Yes, that's all important, but it's also about that collective genius of, hey, I've been there, I've done that, and you can try this. What works for you based on your lifestyle and your goals? Maybe you don't want to quit your job. Maybe you just want to buy a property every 3 years and create a retirement vehicle for yourself. Or you hate your job and you really want to replace it, right? So everyone's a little different, but I think the key to mitigating risk is being in a community of people who are freely giving their thoughts and advice, quite honestly, without a string attached. I think, listen, everyone has something to sell. We have an amazing mentorship program that I literally stand behind, and we support those women. And I would never say when we created it, because we didn't have anything ourselves when we started. And I'll say we do a lot of, free support and free events so women can get what they need to move the pendulum. And I think that's really important, that there's a level of authenticity, whether you spend a dime with me or in our community or invest in our deals or not. That's when you're kind of assessing, right? Can I trust this person? Not just me, but the collective group. And we take things down when it becomes self-serving. There's people in my community that don't even know I have a syndication business, to be honest with you, because I'm so on the other pendulum and I don't want to make it like I'm self-serving. So I think it's important, right, that we share things without strings attached or somehow that it's going to benefit me in my pocketbook.
Well, and I've noticed too that a lot of times people, and I think that the whole podcast industry is fantastic for being able to be inclusive of everybody all the time. I mean, if you have a radio, you can listen. If you have a phone, you can listen to them and get access to international knowledge of all of these things if something's of interest to you. Particularly people that have not moved from the place that they've been, and maybe their parents haven't moved and their grandparents haven't moved. Nobody's moved last 150 years. How do they start to expand their breadth and width of knowledge of real estate in other areas?
Yeah. And that's a big fear of, like, especially if you're in a market like California or New Jersey, right? And you're just like, I don't think this is, I may not know a ton about real estate. It's not be the best area to buy a property, right? We got our start in New Jersey, so I can't make fun of Jersey too much. And I was born and raised there, but
you actually can.
Yeah, I can totally make fun of it. I know. Jersey girl through and through, like, you're from New Jersey, just the way I speak. I think the knowledge base of people get very focused on markets and then they should, right? Because the market is actually more important than the actual property. Don't get so obsessed with a property if you don't even know anything about the market. Now, to have confidence outside of where you grew up and what you know, that's where tapping a trusted community does matter. We've had a woman who's in New York and she's like, do you know anybody in St. Louis? I said, we have a great meetup there. And I gave her the meetup leader and made a connection in the community. And she ended up visiting her. She ended up giving a great realtor suggestion to her, who then opened up the floodgates of the contractor, the title company, the local attorney. So I always like to say, good people know other good people. And when you're in a network and a community that kind of has this shared mission of supporting and empowering, and it's not about, I'm going to get mine so you don't get yours. That's just not our community. You tend to get, introduced to people that could be good, a support to you. A lot of people are investing out of state. We got our start within 30 minutes of our home, and then quickly started to get overpriced, and it just didn't make sense. The key is local people that you can trust, but real estate agents are a great resource. Property management companies are a great resource. They tend to know other vendors who can maybe do the contracting or do the handyman work. And it's also markets that are up and coming, that are, trusted markets. I'm not a big fan of like speculative markets. I'm also not a big fan of markets that are tapped out, and that are overdone. So market analysis is a great conversation to have. I don't want to take us there, but I think the key is to tap a network of people, like at least one person that's a trustworthy contact is going to open the floodgates to other trusted people in that local community. And that's all you need is one, and then it opens up.
Absolutely. And I'm just going to touch on one little aspect of that market analysis, because I think too, if you come from an impoverished area, it's a very dangerous thing to think, oh, I can only afford this house that happens to be war torn, mutilated. It's like, no, that's not a good investment. So kind of, if you can, what are some of the things that you're looking for in a good investment?
Yeah. Well, in terms of a good investment is like starting with the market, right?
Yep.
I think the key is to say, are jobs moving there? Are people moving there? Where's the migration? I mean, you can get really crazy with stats and data. I'm not a data person. I do like data and I appreciate it, but I wouldn't say I'm like a data nerd. But it just starts to become like this common sense piece. Like, are people migrating there? Are they moving there? Or are they moving away, right? Are people exiting the state or community? So I always like to see, and I also like to see a diversity of jobs, diversity of sectors, a diversity of industries in a market. God forbid tech goes under, like this is the next tech boom. Are there other kind of like established hospitals, schools, those sort of things that people are working and will continue to work regardless of a recession or craziness that may happen in the economy. And then in terms of actual investment, knowing what you're getting into, right? There's a whole litany of different assets and things, but what do most people buy when they're getting started? A single family home, right? Let's go with that. The question that I wish I asked myself when we got started, that I didn't ask myself, that I learned to ask myself is like, what are the what ifs? Like, what can possibly go wrong here? So if your first investment's a 100-year-old home, risk is higher. If you go into it and say this home was built in the 80s, different risk tolerance, right? The amount of construction that's needed, the size of the home, all those things, unless you have a construction background or the right contractors, you're always kind of mitigating risk. And I'm somebody, for example, I'm not actively flipping deals right now. We have a multifamily business. I have InvestHER. I have 2 little ones. My plates are pretty full. But if an opportunity to flip a property in our local community came up, and I know our local community, right? I'm giving just a quick example. It's a condo though that's about 1,400 square feet. So then the question is, yes, condos could be a disaster, and it needs a lot of work. But there's only so much that a condo would need versus if I go 100-year-old home came across my plate and I needed to now reconstruct that home, or worse, not worse, tear it down and rebuild, right? Different risk tolerance. So the question is, even for like a single family home, what is my risk tolerance? Who is my customer? Who am I serving? Is this an area that I'm doing with a short-term rental or a midterm rental, and I'm renting it to nurses? And it's just there's so much, like, people don't even ask who they're serving. And they get so enamored about the property or even the market, and they forget, who is it that I'm serving? We've always rented to long-term tenants. That's been our model. But so many people are doing really well in the short-term rental space. Now, policies are changing in areas. So you have to be, very clear on what's happening, because that stuff sometimes out of your control. So I say all of that because when you start to know what your own risk tolerance is, and you start to say, how do I mitigate it? What is needed in this area? Who do I want to serve? And then you start to get into, are things, people coming here? Are they leaving? Who's coming here? Families, young professionals, different type of product that they want. So just like any business, it's not a different, it's a different business in the sense of real estate. Obviously it's unique, but it's not though. You have a customer, you have a product, and you really want to make sure you're providing the right product for the right customer, and that they're going to be there and there's a need. People don't think that way sometimes. They just buy a property and go, why hasn't it been rented? Well, no one wants to be in a field in wherever the area is. They didn't think that through, right?
I love it. So you've had some interest in, as you mentioned, the East Coast with multifamily units. Tell me, what was it about those that made them appealing to you?
Yeah. So we got our start in New Jersey, and then we quickly, or not quickly, over time said, this may not be the market for us anymore. We were buying mostly in Trenton, New Jersey, which is, New Jersey's capital, had plenty of properties that were dilapidated. We wanted to make a difference. And then we renovated them and really made some beautiful properties out of it. We started to see the pendulum shift with taxes and regulations and different, quite honestly, challenges. So we got an opportunity to buy a property in Philadelphia. And that was like, oh, okay, this is within 30 minutes still. Then we got to an hour and a half away, which was in another town in Pennsylvania. And then we got presented with some opportunities in North Carolina and Kentucky, which is the majority of our units now. And same reason, being from the Northeast, and then seeing this migration happening to the Southeast, both from jobs, from all different reasons, people are literally leaving, especially New Jersey, in drones. It became very evident to say, okay, where are the families? And we want to serve families. We want to serve people that there's a housing shortage, quite honestly, in most communities, good quality housing. So we started to look at the different, market trends and see what's happening. And we really liked, and we also liked the diversity of jobs down there. The growth in we're in Winston-Salem. We have a lot of units in Winston-Salem. And we started to say, oh, wow, this town is booming and doing really well. Durham and Raleigh are overpriced now. So I'm not a big fan of investing in areas that are already overpriced, right? It's more of those areas that have a lot of the good bones. There's movement happening, and you're behind other big investments. We're not the first. We're not a big, we're not the pioneers. You never, that's more risky to be the pioneer in an area. So you start to see trends of, you know, new construction, movement with schools being built, different things like that. Those are all positive trends in the right direction, depending on who you want to serve. But that's what we really like about North Carolina. Winston-Salem in particular, because it was a very strong market, not quite as like advanced as probably Raleigh and Durham, but it was on an upswing because of all the different infrastructure that was going on, colleges, hospitals, jobs coming to that area, tech. We are also invested in Lexington, Kentucky. And then for a variety of reasons, we really like the stability of that market. And, you know, just because it was been very stable, you know, growing, not quite probably, I'd say, in terms of, you know, higher growth than North Carolina, but very stable and growth in terms of diversity of jobs and just the kind of the staples that you want to see for home ownership and, you know, all those things.
Nice. As far as your syndications go, what are some of the requirements now? Are there different requirements in the different states in those areas for investing with you, and kind of expand on that?
Yeah. So, you know, in terms of, and syndication it's a big term, right? And in a sense, people are filing with the SEC, pooling money together and filing with the SEC to say, okay, we're going to go, you know, purchase XYZ, and you're basically creating a company with these investors. And it's basically delineated between a general partner and a limited partner. So the limited partners are the passive investors. They're not talking about the windows or what you should do to the lawn, or, you know, or what you should get granite, or should you just do, you know, something else on that countertop. They're literally investing money, and that's why they're called passive investors. And it's filed that way, and that's important. So when that happens, you know, all syndications are not created. You can syndicate a hotel, you can syndicate multifamily. Syndication is just the way it's done. For us with multifamily and for our kind of projects, you know, investors can be accredited or non-accredited. Some investments you file a certain way with the SEC, and you're filing as a accredited only, and that's a certain making $1 million or more. No, it's not $1 million. You have $1 million in net worth or more, and I think you're making an individually 250,000. Don't quote me on that. I think it's in that ballpark.
Well, and that'll change every month. So
right.
Look it up depending on when you're listening to this podcast.
Right. So, but it means there's certain reasons why some companies, and why we've done accredited only investments, meaning we can go talk about this on a podcast. I can put a sign in my lawn. I wouldn't do this, but I can put a sign in my lawn and say, hey, we're raising money for an apartment building. Come on, work with us. Like, I could legally do that. When you work with non-accredited, or they call it sophisticated investors, basically it means you can't solicit. You know, you cannot do that. You can only bring investors in that you have a pre-existing relationship. Again, you know, everyone would probably argue on what that even means to have a pre-existing relationship, but that's important to note, and you really don't want to get in trouble with the SEC. So most of our projects early on, Michelle, we were raising less money. So we worked with sophisticated investors. We really had that true pre-existing relationship that we had a handful of folks we worked with, still passive, but we didn't have to get just accredited only. Then we scaled, right? Where we were raising for, the last project was 750 units. You know, it really mattered that we can put the word out, if you will, right? Because you've over 400 investors, but timing is everything in life, right? Who has money to deploy? Who has money they want to invest in this? You know, they want to get diversified. They don't want to put it in multifamily. They have money they want to put in oil and gas right now, or whatever the next thing is. So we've kind of had different projects for different reasons. We've gone back and forth. The bottom line is that if you're not accredited and you want to be passive, you can invest in projects. It just has to be the right projects. The biggest thing, especially from a requirement perspective, is you typically like minimum cash, right? Some syndicators will take minimum of 25,000. Some will take 50, some will take 100 grand. I know we've typically worked with people from like a 50 grand kind of threshold. There's a lot of different things you can do when you don't have that, and you maybe want to deploy 10,000. There's a lot of new creative ways that people are REITs, for example, right? It's where kind of like the stock market meets real estate. So there are creative ways to get into investments passively in real estate. The key is twofold. You want to make sure, if people want to consider that, you want to really make sure that operator has a track record, and that they've brought their projects full cycle, meaning there's a lot of folks out there raising money who have actually never sold a property. And why that could be problematic is that you haven't brought it fully to a cycle, whether it's 3 years, 5 years, 7 years, whatever the business plan says. There's people that kind of got in right at the tail end of COVID, and they're like these quote unquote big investors when they really haven't even they've been in it for like 2 years. So being mindful of how long people have been in the business, what their business plan is, and what they've done successfully in terms of a full cycle would be some key things I look for when I passively invest, because I also look for other opportunities too. If our projects, we don't have places to park, money that we earn somewhere, and we want to start working for us.
Right. So we'll go back and talk about kind of the newer investors that are looking to invest with you. What about the savvy investors that are going, hey, what's your portfolio? What do you got going on?
Yeah.
What are you offering right now?
Yeah. Savvier investors want to know, like, who gets paid first, right? Are there preferred returns, right? Are you getting money? Are you getting paid first? Like a newer investor may not know that, even to ask for that. A savvier investor, quite honestly, is going to ask those questions. And what you want to look for, and I love savvy investors, because they're being really smart with their money and saying, quite honestly, where's the best return for my money, and how my priority in this deal? That matters, beyond fees and everything. How am I going to get not only my money back, but, how am I going to get paid first? Because right now, right, interest rates have obviously gone up. People have gotten into deals where their interest rate was, X, and now it's Y. So that the property, the deal, the project may have shifted a little bit. So I think the key, savvy investors also do not like a lack of communication. Like, I invested with these folks. It's been like 3 months. I haven't heard anything. That's regardless of what's happening in the property, right? Whether it's on business, if it's on track for the business plan, or it's gone off a little off the course for a variety of reasons, maybe out of your control, communication is critical. And I'll have people who are pretty savvy saying, how do you communicate to your investors? How often? What do we get? I don't want just, hey, it's going great, and give me some random pictures. Where are the financials? I want to look at them, and they'll scrutinize those financials on calls. And it's their money. They should, right? If they're not getting what they want. I've been invested in properties where the finances haven't come in 6 months, and it's like, I don't know. They say it's going great. Well, I don't really care. They say that,
Right?
Right. I mean, that's great that you're telling me that, but so I think that becomes important for people that have been around the block a little bit more, that from that perspective.
Nice. So is there any properties right now that you have on the go? And obviously, if anybody listens to this in 6 months, it's going to be out of date, but
we've shifted. Yeah, we've shifted our model for, we were actively buying, multifamily, and because of the market and just the market's still overpriced. So interest rates have increased, but a lot of sellers have stuck to their prices as though we're, right around, the COVID times, and people aren't going to get those prices. But anyway, things are overpriced still. So we've shifted our model to, at least currently, as we're still sourcing projects that financially make sense. We've created a fund where we have, investors, investing in this fund, where we're lending this money out, more like hard money, to folks that are doing new construction. And we have a partner in that who's vetting conservatively vetting these projects. And then we're kind of, working together collaboratively to put that money to work. So that's, something that we have ongoing, and we've invested ourselves in it. And it's, one of those more blended funds. So you're actually hedging, right, where one project is and another project is, versus only syndicating and putting a project together based on the property. This is a little more blended. And arguably, right, could be something that's you're hedging for ups and downs because of that. So that's what we have going on right now. And
let's talk about ups and downs, because I'm from Calgary, and if you don't know it, it is known as Boomtown. So it booms every 10 years and it bombs every 10 years. It just kind of keeps doing that. and anybody that's been around for 50 years, we get used to it. The newbies, on the other hand, are going, oh, but when's the right time to invest? Buy low, sell high.
Yeah, yeah.
But
I think every market's a little different, obviously, but we've never invested in areas that are like have gone through the really highs and the really lows. We often will say what class, what class property is it? Is it new construction versus a more dilapidated? We've taken more dilapidated. Our history is really repositioning properties. So you're taking the control back, meaning as you add value to that property and you bring the value higher, in terms of investment in the actual property, you're creating your own return on investment, if that makes sense. You're not kind of holding your breath, hope this area turns around or my investment goes down. To me, I'd much rather be in the control of my own success or my own failure, right? Which, could be something that, people are like, but you want to be in a market that's definitely hedging up. But, if it's experiencing so much of a high, those are the same markets that typically take the hardest hits, and so
you very much have to be willing to play a long game.
Yeah, exactly. And that's why being the first to something, a pioneer, as that talk about risk. I mean, I like to be in they always say path of progression, right? And affordability is critical in our society. People being able, and I don't mean like a program, I mean literally people affording where they want to raise their families. How can I afford to live in those places? If you could be part of that solution as you are an investor, you'll never have a shortage of things. So that's where the creativity comes in. But there is a housing shortage for people to afford where they live. How do you solve that? Would be my question mark. And those are the markets and the communities that I want to figure out. We don't do a ton of new construction, but that there is an opportunity there. Again, takes a little more of that knowledge base, but that seems to be coming up a lot in our community right now. Women investors, they're just like, I see this opportunity to get involved in new units for 55 plus, or it's a lot of different things happening that are opportunities right now, just to kind of keep your ear on where is the need, where are people complaining, housing is what everyone needs, depending on, obviously their socioeconomics, but everyone needs a home. Everyone needs a house, I believe, and figure that solution out.
Well, one of the things I love about the real estate industry as a whole is that if there is a complaint to be found, there are 20 opportunities. It's like, so if you're going, oh my God, the sky is falling, the market's crashing, what's going on? Go into real estate and there's always going to be opportunity in there. And that to me is a very powerful mindset for all people to have. And if you can associate with people like that, you start to see opportunity where other people only see failure and dismal circumstances. So to me, hanging around you guys is paramount as a first step for sure. And then going in and asking all the questions where they're at. Like, so in your business, have you reached the $1 million mark in your revenue and increase? Was that an important milestone for you to hit when you got there?
I think it's an important milestone, for a lot of people, right? They think, we put financial goals out there, number of doors or revenue or, what have you. And yes, I think as you're creating, you almost are like reminded, like what I'm doing matters. And it shouldn't matter that I'm saying that, but it's almost like when people are willing to spend money with you and really they see your vision, not just see it, but actually want to invest in it from the perspective of spending money, et cetera. And more and more people want that for themselves along with you. The money matters from that perspective. I think the goal is how much are you keeping? How are you able to bring on, staff members, and then you're building a team, which is a whole other, right? A whole other, skill set. So yeah, I'm grateful and appreciative of hitting that milestone and then some. But I think the bigger question is, it's the managing part, it's the infrastructure part, it's the creating the repeatable processes part, with growth. So you're not just so enamored with growth for growth's sake. You're creating that stream and that income so that you can create the, team, infrastructure, processes to serve more people. So that surprised me, where I would be more like, because I never saw myself as someone who's more process oriented or systems oriented, but I see such the value in the investment of that in people so that the business can grow. So you're investing too, a lot of that revenue too. I think that's just smart.
Nice. So if somebody has that intention right off the get-go, like I want to make $1 million in real estate, great. Is it going to run slightly differently than somebody that goes, I just want to create some passive income. I just want to know that I can pay my rent every month and it's coming in. I can worry about, kids' books being and sporting equipment being an extra couple of thousand a month. And I'm not going to freak out about that. Is there two different plans on those?
Absolutely. I think there's there's actually two plans on even thinking about the perspective of, am I going to trade my time for money, like a chunk of money, whether it's a flip or there's different things that we do, like, active work in our business, fees, what have you, versus that residual income, right? That passive income that you are. So it's less money, but it's more ongoing, if you will, versus, the chunks of money, if you will, to deploy into long-term assets. I think depending on where people want to be, I'm a big fan of like, what are my short-term financial goals and what are my long-term? I mean, if you're in debt and your credit score is horrible and there's certain things that are in front of you to do, okay, that needs to, it's like hierarchy of needs, right? We all have to deal with certain things before we can, create $1 million in passive income. Awesome goal, but let's start with the path. But if you're not crystal clear on the long-term and the short-term goals for yourself, based on where you are in your own life and your family, et cetera, any project, any deal will seem like a good one. And that's the fastest way to just make a ton of mistakes in this business. So, because you have to protect, what is it that I really want, just from a financial perspective, amount of money, timeline of that money, interest, what are you going to do with it? So that you could back into what the right investment is. Because quite honestly, some people could just passively invest and make the money they need to make versus taking on all the risk. That seems like a better idea versus, so.
Yeah. One of the things I love again about real estate is that where you are is just where you are. And you got to understand that there's no right, there's no wrong, there's no impossibilities, there's no more possibilities. It's just where you are. And being able to be honest with that, I think adds a lot of liberation to a lot of people. And then understanding that the path can grow from there and you just have to reverse engineer it, because there's 360 degrees that you can turn in real estate and go, oh, and there's a different opportunity and there's a different opportunity. And they're all structured differently and depends on how you want to set up your life.
Yeah. And what you're willing to do as a business or a hobby or part-time or full-time, and then partners, right? What you need to bring to the table, what other people need to bring to the table, just all those pieces matter. And so you don't have to figure it out and do it all yourself. You want to avoid that.
I know our listeners are going to want more from you. How did they start that journey with you?
Sure. There's a lot on our website, the real estate InvestHER, HER.com. And we have multiple free events happening a month on different topics, whether it's real estate investing, business, or self-care, because all three of those are kind of like our values that we really want to ensure women are embodying as they invest. We also have our Facebook community. You can go to, like I said, on our website, you could just click on the Real Estate InvestHER community. And we have over 15,000 women posting questions, getting support. And on our website too, there's a host of meetups. So if you're like, I do enough online, I just would love to meet some local women in my community, like-minded, that God, we can actually chat about real estate and we don't have to talk about, I don't know, whatever other things you don't want to talk about, or just talk about our kids or whatever. We have over 50 meetups. We have a few in Canada and we have a number of them in the United States, and with the goal of having one in every geographical area of the world to give women that local support and global support of creating that financial freedom. So yeah, those are a few ways to get connected to us, but especially the events, because we have some killer topics that are pertinent to today's economy, and great. We handpick the presenters. So
love it. So we will, of course, have all of Liz's links in the show notes. Go ahead and scroll down, click on another link, open it up in another browser, because we're not done yet. So Liz, at what point in life did you know that you're a special kind of crazy enough to think that you could become an entrepreneur?
when I was 8 and I started my first business. I sold Gatorade gum. I'm dating myself, but Gatorade gum was a thing back many moons ago. And I was doing so well with it on the bus. And then I got shut down and they told me I couldn't sell gum on the bus, which is ridiculous. But I didn't think of myself as an entrepreneur, but I had this, I'm like, I'm going to buy it for that. And I could sell it for that. And it just started that, little business opportunity for myself when I was not 8, I was probably 10.
That's awesome. I love it. You know, see opportunity where it exists. Where there's a market, there's need.
That's right.
I love it. You've been awesome. Any last words for our peeps?
No, I appreciate the time so much. And I think the key is to take action. Don't get enamored with knowledge, but make sure you're surrounding yourself with people kind of like that want to support you. I think that's really important because people get stopped on the knowledge and they just don't take any action because they're not really around other people doing what they want to do. So that would be my biggest thing to tell people.
I love it. Thank you so much for your time. I appreciate it. And I know how valuable it is.
Michelle, it's awesome chatting with you. I appreciate being on the show and everything.
Awesome. Peeps, thank you for being here with us today. Be sure to subscribe to the show, share it with your friends. We love helping entrepreneurs grow.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention. You do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap. They offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.